Testing the audio. I think we are good to go. What is up, YouTube? Welcome back to another backtesting video. I think this is part 4. And for part 4, we are going to switch it up, okay? I'm going to be charting the Pepe USDT chart. I recently, 2 months ago, I added Pepe to my altcoin watch list to trade. It respects smart money concepts extremely well. At this moment in time, it respects it even better than gold. I have been trading this asset a lot lately. So for myself, I want to gather more info on it so I know what I can expect even more and prepare myself for the trades this upcoming week. While also, me taking more trades equals you guys also learning more, because I will be taking more trades. You'll see how I manage the trade, how I spot it, and everything about the trade. So Pepe USDT for today, I have my Excel sheet next to me, as we've been talking about in the first parts. These are all the trades taken in the previous 3 videos. 16 trades in total on gold, and now I have added Pepe USD underneath, and I'm just going to be counting from 1 again, because I want to gather different statistics on gold itself and then on Pepe, and I don't want them to get mixed up. So I just made a quick separate tab, which you guys can also do. For the new people, this is our journal, so we have the trades here, the date of the trade, the time we took it, if it was a long or a short, the confirmations. These aren't public, but if you watch my previous videos, I take a certain trade and I write a certain number, so you can kind of figure out yourself what these numbers mean. They're entry models, so I can tell you, like, 1 is regarding a Wyckoff Model 1 distribution, and 3 is regarding a Wyckoff Model 2 distribution. That's what I'm going to spoil for you. The rest you can figure out yourself. And then here we have the results. Okay, so far we've been doing extremely well. We have 2%, 5%, 3%, 0.2 break even, tiny 0.2 loss, 2.2 gain, 4.7%, 4.75% gain, break even, 4% gain, 3% gain. This is a trade I for sure should have taken, and that's why it equals blue. I tell here in the notes, did not take the trade, but I should have. And it's just that if I see this happen too many times regarding entry confirmation 3.23, it's on paper, and I realize that, if I doubt a setup and it's a 3.23, let's just take it, because more often than not, it ends up working. And then we have a 1% loss, but we explained that video very easily, because I didn't notice a supply chain that we had. And then we had a 3% gain and a 2.6% gain. So amazing results. So far, let's go through the notes real quick. We have really pay attention to potential swing turning points. I remember this trade. It was a very beautiful trade. Then while trading stop loss, watch out for potential SFPs. So let's keep that in mind for this video. This was a break even because I was breakout trading in a proper way, and I de-risked quickly. That's fine. If there's a chance of an accumulation while being in a Model 1 distribution, partial TP at extreme demand. Okay, that's also good to remember, that if we have a distribution that has the chance to go over into an accumulation instead of hitting its target, let's partial TP instead of waiting for the range low. So let's keep that in mind. While trading stop loss, watch out for demand remaining below the price to tap into. So 2 times we have watch out for trailing the stop loss. So let's keep that in mind, that we don't just trail stop loss, but we watch for SFPs and we watch for fake breaks. 50% still running. That's that swing long. And that's the loss that we already explained. And then we have 2 trades that are still running on the gold backtesting. So what I take from my notes, is that we have to watch out for trailing our stop loss for potential SFPs and fake breaks into demand or supply. And then, if there's a Model 1 distribution, watch out for it to turn into an accumulation if we also already wicked out the low prior to creating the distribution at the top. Okay? And this is really important that you remind yourself this constantly. Just like you learning for an exam, you know, if you really remember it once, a month from now you will have forgotten it. But if you keep on reminding yourself month after month, you know, it gets stuck in your head and you cannot forget anymore. So this has been a while back. I think like a few weeks ago that we did this. And now I remind myself again that I have to watch out for trailing my stop loss, and I have to watch out for potential accumulations when I'm in a distribution trade. So we're going to take these notes into account on our current backtesting run. So swipe these to the left on my other screen, but just so you guys know what is up with that. And then regarding Pepe, I have picked out a point that I think is a good starting point for us. We've had this massive range, and then we wicked out the high, starting a new range. So it's a very clean way to start the back testing, just, you know, confirming a normal range. And then from there, we're going to trade it. And I also picked this point because it's only a month ago, a bit more, and the 1 minute time frame is still valid. And I like to use the 1 minute if necessary for a confirmation. And if you saw my previous videos about gold, you know, we had those setups where I was so far back in time that the 1 minute wasn't available anymore for us. So I think this is an amazing starting point. I have my music. I don't have my water, but I think that will be fine. If my mouth gets dry, I will grab some water in between. And I plan on doing a 2-hour plus session. Maybe I'll split it up in 2 parts. I hope my PC stays acting normal and keeps on acting normal because it's a bit heated. The weather is nice outside, but let's just get straight into it, okay? I'm just going to be back testing. I'm going to be talking, but I also have music in my ears, okay? So let's do this. Okay. So we just wicked the high of a massive range, and of course after an expansion away, this aggressive expansion away, we start another range. So immediately I'm looking for multiple trades, you know, range high, range low, or if we form ourselves our own little range in here with a distribution, I will trade it. Same goes for here. Because I always say, ranges don't have to hit the extreme place. There's really not that much in the upper section of the range. The volume area high is at the EQ. And this is just liquidity here on the left. So I do think that we can tackle the range high from here. The timing also important to add. That's what I forget often. It's 10 in the morning. Okay, so we're an hour into London on Tuesday, which should be a good trading day. Okay. Breaking structure here, but nothing that significant for an entry. SF being the low. And lower you go. And as you can see, those 2-minute breaks, they're not a valid entry model, but they can just cause a higher low on this 15-minute pool. So I'm just scanning price action locally until a setup appears itself. There you go. Extreme point taken. Range high. Sweep of your range high. Let's look at the most local structure that we have from the low up. Not really anything. These aren't two candles. It's a doji candle. This is the 1 minute low. This is for sure the more low. Break this low, you'll probably come to this low. Break that low, and we can see lower prices. I'll look for shorts here if I can find one. The volume area high is there. POC is above this one. So if we don't get a short here, you know, maybe we break this, get that back test, and we'll find it here. From a support perspective, there's not that much. We have some tiny form of range demand here. Backed by the volume area low. And then a tiny OBM here, but that's not worthy of putting on your chart. Let's see how price develops. Seeing supply get respected. Because of the move up, sweeping all liquidity, I will be looking at it from a Model 2 distribution perspective. But tab 2 and tab 3 are way too close compared to tab 1 and tab 2. But that could just be a local Model 2, you know, just a local Model 2 that brings us down pretty significantly. And then later we can come back higher and do this, or even lower for a proper Model 2. Because if I zoom out on the 10-minute, this is just one move, right? This is just one move up, and you don't even notice the third tap. But there's no structure between this low and that high to confirm an entry. But you do start breaking the low. So it does show that local market maker involvement. This actually moved up. So we're bouncing from the POC. Again, bouncing from the POC, deviating the volume area high. Not really rejecting from what I expected us to reject. This is also your last real resistance before taking the highs. But there's just no structure. There's no structure here. It's just one move up. This is like 30-second structure with a 1, a 2, and a 3. But no entry for us. It would have been an entry if we had structure, but there's no structure. You did break this one. I would try and trade this. Yeah, I would try and trade this. Take it towards here and then see what happens from there. Cuz this, I would then put this as my third tap on the bigger time frame, right? Cuz you barely see this one on the 10-minute time frame. And this is the last supply. So that does meet the requirement. But if you surpass this, I would look at this high, watch for the same, and otherwise I'll watch for the actual high, and then we'll have a model 1. So let's just see what happens in here. The only thing I dislike is these two, these two highs already taken place. But let's see. You got the rejection, but again, no structure. No structure. And then really ranging from here. Redistribution. See how it respects everything. Model 2, and here again, 1, 2, 3. Hit the target. I think you could actually pull off like 15 seconds trading on this asset. Really nice. And you get the tap. So the planning was there, The planning was there that, looking for a rejection here, take it to here, but nothing to confirm it. Now there's nothing but liquidity above you, right? Because you've hit everything. You took that high, you took extreme liquidity here. You hit last supply on this one, and now you hit last supply on that one. So if we go higher from here and we start breaking those internal highs, I think we tackle this high. Start losing this low, and come to this low. Now we're kind of entering a trade or a time zone where I wouldn't really trade. 10 p.m. my time. UTC +2. This is an institutional block on a very low time frame. Because it's the order block of the distribution here. giving us the significant rejection though. Okay, let's reassess here. Let's get rid of that. As said, past this point, I do think there isn't much stopping price from taking this high. I would watch this local high here for a proper model 2 distribution. We're leaving nice liquidity below us. But if not, I'm looking for a model 1. Okay. Add some resistance now. Break that volume area high and we're going higher for sure. There you go. Higher you go. Let's see what develops here. Most important structure point is this one. There you go. This is what I was hoping for. Because now we got a model 1. And the model 1 at a very important market structure high, which is this range high, is very nice. Then besides that, the way we have been coming up, oh boy. The way we've been coming up here, there is liquidity here. And then that was perfectly tapped, so we got liquidity here. Technically, this whole thing is liquidity. Let me scan for some support. We got literal support on this demand zone, or on the no market structure low. So break that and you're chilling. Check the volume profile. Yeah. So if we get a good break, I'm talking not like a break here. For Model 1, you don't need a break inside the volume profile as a requirement, but it would be nice, you know. Preferably, you get a deep break, pull back, reconfirmation here, and you short it down. But that's, you know, that's perfect case and a perfect scenario that doesn't have to happen. If we get a break here, you could already enter some of the break and then see how it develops in this box. If you see the box get lost and then have a pullback, or just a deep retracement in the box, get a pullback, just start scaling into your position. Because if you enter on the break, put your stop above the high, and you target the low, it's already a 4.46. And then if we are able to refine it down, that will be amazing. So let's just see how this develops. It is valid 5-minute structure. Okay. Even having like a tiny distribution here. 1, 2, 3. That's pretty sick to see. Just shows a lot of market maker involvement. It just missed this though. If that would have been tabbed. That's the break. There you go. Okay, let's enter. You know, if we had mitigated that supply zone, I would put it I would put it above that high. That was the mitigation, but we didn't mitigate the supply zone. So for now, I'll just keep it here. So instead of having that whole shit on my chart, you know, I'm just say I'm entering short. Boom. That right there. Best case scenario, we reject here. Yeah. Yeah, this is looking primed, bro. This is looking primed. I would double down on my risk, maybe even. Let me see. 1.123. Model 1, return to zone. Yeah. Yeah, for sure. If we lose this low, get acceptance back inside that volume profile. There. That's where I'll add. Right here. Respecting this most refined supply. Internal break. Let me double check this. Yeah. Yeah. Okay, so enter. We entered here, entered here. What's the timing? Let's check. Oh, on London, we took that high, and the high was pre-New York. Okay, we took the high, and then we're going down. It's really, you know, coming here, and we're 100% safe. If we come there, I will start looking for any redistribution shorts that we can get to keep on shorting this whole move down for sure. Let's zoom in what happens. Shoot back up. Just the SFP are more important high. We're short already, guys. Look at that. Was there a reason to come higher? Well, we did have this little 1 minute block, and it was our 5 minute high. So we took the high, took the liquidity of that high, hit the last supply, and then broke more down. That's amazing. That's amazing. Yeah. Let's get this effect going. There you go. This is looking good. This is looking good. The target, haven't set the target yet. The target is this low. Because as set in the journal, you know, if we have an accumulation, watch for extreme demand, but we don't have any signs of accumulation because this low has never been taken and we just have liquidity in front, okay? So no reason to take any TPs until that low. Stop is above that high, chilling. Let's see if we can get more shorts in by following the trend. Not really the best of breaks here. Break that low, come to that other low. There you go. Simple market structure continuation plays. Mind you, we took a 2% risk on this one, you know? We added on this break, and we added on this break. Damn. What's this? A news event? 1430. That's for sure a news event. Could just be a liquidity sweep for lower, for sure. Could you see this coming? Not really. The invalidation is still that high. Oh, damn. That was a quick buy to sell just to grab some more liquidity above that supply zone. That probably trapped a lot of people. Yeah, no, I'm pretty convinced this is gonna work. This is a bread and butter setup. And there's also an important part to add. When you're backtesting and you enter the trade, you know, don't just click until it either hits your stop loss or target. No, analyze the trades and analyze the moves while being in the trade to see how would I have done this live, you know? Right here we got that reconfirmation for lower, and lower we went. So, you know, maybe you could enter a short here. I wouldn't really like to do it because, you know, well, these were equal lows. Because I'm already short with a 2% risk, I wouldn't do it. But if I didn't have an entry yet, I would have potentially taken this. But now I would have not. And we're getting that expected move towards the downside. Very nice. let's see how it develops from here. Lower highs and lower lows. Wouldn't be surprised to see somewhat of a range formation prior to taking the low of the range. Yeah, that's kind of what I was expecting. Some bit of a relief after that, extensive move towards the downside. We're entering time zones where I normally wouldn't really be trading anymore. But, there's nothing to worry about because we're just overall following this 5-minute downtrend that we have put in. Or this was just a fake. Boom. I do have to say, our entries with our stop loss over there, I would have been putting them above that high now. Because it's just a previous market structure high point, and it was such a buy to sell effect that, I do think there was some market maker involvement here. And if we get past that point, I don't see that model one working anymore. So that means we're, I think we're risking like 0.5 instead of 2. I always like to clean up my charts to see the next play. This is some nice resistance. This is like 10, 11. Coming up, but we're leaving so much liquidity to the downside. And here as well. I would be looking for a potential short here. Let's check the volume profile again. Yeah, so we could be putting in a lower high if we follow market structure from the top down. And we do have that range effect here from the low up. Let's get rid of this EQ. That's our 1 tap, that's our 2 tap. Let's extend it. Could we get the exact same setup maybe on the lower time frame? Something like this. And we dumped from there. I'm assuming. Yeah. This was a valid setup. Would I be that excited about it? Not per se. But we do have a range deviation here, We did have that manipulation. And then we had a very aggressive move back inside the range. And a requirement for range deviations is that break back inside the volume profile, which we did have. So that will mean this is your trade. on the break. Stop below the low. And we don't have to target this high around here, this supply zone is the extreme supply of the move, while being around the volume area high. So this would be around my target for this range deviation trade. I clicked a bit too fast, and you can also say, you know, that this was easy to sweep liquidity, but instead of sweeping this easy liquidity to the downside, we had a massive bullish break back inside. And since you're already short, you can hedge your position that way. So that would have been the better play to do. But I clicked a bit too fast. The timing though, normally I wouldn't be awake at 7:15, already ready to take the trade. That's when I kind of start my day, but I wouldn't be behind the PC yet. So normally would not be awake or available for that trade. But if you're already hedged, you know, and you have this easy to sweep liquidity, and you see the manipulation breaking back inside the volume profile, this is a trade you could take. Could the model 1 idea is still there, but it became 10 times less good, because you already had the manipulation below the low. You don't really have a clear target anymore. But we're still backed by the bigger Wyckoff. I'm actually seeing another model 1 here. You had the 1, you had the 2, you had the 3. What I don't like is that you this is 2-minute structure, and it's a valid break on the 2-minute, but on the 1 it's not valid structure because you don't have the 2 candle rule. So that's kind of weird, but either way the break was very big. The break was very big because the break was all the way down here. And just because we had that retest into supply, I wouldn't short because it could also be a 1, 2, and 3. If we did not hit this low prior to taking out the high like this, I would just short the retest. But because we already took that low and there was a chance of an accumulation, like set in the notes, you know, watch out for an accumulation. So, you know, I would need a reconfirmation that wasn't there until here. And then, you know, this is already the target. Locally speaking, we're in a potentially a bigger distribution inside a bigger distribution. So we can already see in these first few days how much Wyckoff there is on Pepe. Bouncing off our zone. Kind of having a 1, 2, 3. And this could also be a 1 and a 2. and a 3. Did we take that high? No, that just failed. That's funny. That's funny. There was no confirmation either way, but nice to see. But now that we see this Model 2 failing, which could potentially be the bigger tap of this Model 2, I'm getting pretty convinced that we're finally going to hit our target. There you go. And there has the target, or there the target has been hit. No trades in between, you know. We came up very aggressively. If there was another short, this would have been the short. But this kind of threw it off, you know, to confirm the retest entry. But overall, very nice trade. We doubled down on our risk because it was looking so good, right? So let's calculate real quick what the risk to reward was on here. I remember we added here and then we added here. So let's just say the average entry was in between these 2 points. Our stop went here. Our target was 1 take profit at the range low, and we doubled down on our risk. So that would be, how long would that trade last? A day and 6 hours. 3.8 times 2. 3.8 times 2. 7.6. So let's grab the Excel sheet. On Pepe. Let me zoom in first. 15th of May, 10:36. 15, 10, 2024. 10:36. We went short. The entry confirmation, let me grab that also really quickly. It's a 1.13 1.13 result 7.6%. There we go. Auto save is on, and that's our first trade on Pepe. So, notice how I, prepare my thoughts before, we potentially get the break. And also while being in a trade, I'm analyzing the markets, see what my emotions would have been if there are potential other entries inside this bigger entry. But, taking out a main market structure high, having that Wyckoff effect, it's actually something I used to call KCC, the KCC setup. It's a private setup, but it doesn't happen that much. So when it happens, I'm very confident. Hence the doubling down on my risk. Let's clean this up for now. Because we have hit the technical target. This is massive support. Just regarding in case we do get a range deviation. This is like your make or break it supply, This right here is your make or break it supply. Make it means higher low for a higher high. If we tap it, break it, and I see just like a full on rotation down. With no reason to even come here. or we don't have to come there. From here, we can, go over into an accumulation. So let's see. I would say this is a very important area. It's your 5-minute high backed by 5-minute supply, while also being the volume area low. So above that, we have a very nice looking return to zone. And we kind of hit all supply on the way down, as we discussed earlier. So I do think once we start, or if we start reclaiming, this high, that if we can get an entry on the retest, we can, target the volume area high and higher. So that's kind of what I'm looking at on this setup. It's pretty big. I don't like setups that are too big. Meaning if I enter on this break, I want a reconfirmation in here. Otherwise, I have to keep my stop here. And that would be a 6% stop. It's a bit too crazy for me. But let's see how it develops, okay? However, this is an important talk that you should have with yourself, In advance, you should discuss what could happen and how you will and want to trade it. So we did deviate the low. Yeah. So we did deviate the low from here. But the way we came up is not the best. Just leaving this low here and then every low being a higher low. Kind of leaving this liquidity curve. Also entering the 9-hour zone. Pass by the supply, that's good. Let's see what we can do at this 5-minute high. So far we SFP'd it. If we start losing this low, we could get a bigger pullback. Oh, wrong too. Start breaking that high and we go higher. Not the best break so far. What we could do is have a new local range here. Yeah, it's midnight now. Crazy moves during Asia. Nothing really tradable. I'll look for this. You really don't have resistance. This is your only resistance. Zone. I'm really having trouble with that high. SFPing it twice now. I'm not convinced by this break yet. It kind of looks like a peekaboo. If you take so much time to break a high, you want to see immediate follow through, not this. Okay, now it's 9:15. Yeah, really struggling with that volume profile. Like, is there something that needs to be mitigated lower before potentially coming higher? Well, there's your answer. Besides that, we just have liquidity. So if this were to turn into like a 1, 2, 3, go up from there, either this demand would do it, or the last liquidity point, or it just goes and becomes a model 1, just like we had at the top here. But there's not really a confirmation for me present to take. Something you could give a shot is a break of structure from this point and that point. But I don't think we have structure. This is the high to break now. That's the internal high. No, there's really nothing until this high, which is pretty far away from the demand zone. A good 2%. And Pepe has trouble taking out highs. Looking like a local distribution. Not really a confirmation, and we did take the low, so it could turn into an accumulation. Now I'm getting curious because we have a 1, we have a 2, we have a 3. Like I said, reaccumulation. We don't really have any more resistance. Oh, this is looking decent. However, this is not valid 1-minute structure. This is. But this break is looking primed. Let's go on the 30-second. It is 30-second structure. I just really like this 1-minute candle. You know, that deep wick. Grabbing some liquidity. Grabbing some unmitigated demand somewhere on the left. Breaking back inside here on the volume profile. While overall, you know, if we zoom out, this could be the bigger Model 2 tap. What's that? Okay. The RR is not good. The RR is not good. But it does have potential. You know, that's why I'm contemplating taking it, right? You know, for the recording, I'll just stick to my rules and I'll wait for this to break and see if I can get something better from there. Maybe we break this, you know, come back down, and I see something in here, and then I'll take it. Okay, so we do break it. Get the move above this liquidity point. And you do have to watch out. I was first looking at this as a distribution, but it could become this because of. But you're kind of stuck between the distribution and an accumulation. No trades for me. What's the timing of this? 13. Where are we right now? Could this be the Model 2 that we were waiting for that I just missed? This wick demand with this break. It's really stuck. I was waiting for this, you know. I was talking about that back test, but we didn't see anything here. But we still have this wick demand. And then this could be the case. Just like I was talking about. I think an accumulation does make more sense in general. It is a 2.3 risk to reward to that high. Let's There you go. They should change that. They should literally change that. You know, I was talking about my reasoning as I was describing live is that, we have the potential 1, 2, 3, and I was watching for this high to break to potentially enter on a long on the retest. However, the way we swept this high and got such an aggressive move down, we already swept the initial range high, which was right here, a 1, and this was the sweep. So yeah, this could be the third tap in that moment, but after having more data on a higher time frame, this can be the third tap. So we were stuck between the distribution and accumulation. Hence why I wouldn't just long a retest because I'm potentially longing into a bigger distribution. I would need a reconfirmation. We know model 1s can go over into model 2s. Reasoning here, wick demand. Right here, we got the break. Enter on the break, target to the high. Instead of that 1 point something we had earlier, right now we have more data, more reassurance. As said before, we were in a sense where an accumulation makes more sense. So this then will be the long. The timing is okay. It's a bit before New York. You target this high. However, you can target potentially way higher. Because looking at resistance, this is not that much. Let's look at it from an order block perspective. You don't, Loki, you don't have that much until that high. I think for this trade, that would be my final target. It could come way higher, but to hold it for that long, such a local scalp, I don't think that's not something I normally do. We do have that volume profile that we should watch out for. Boom. There you hit your target. We did not mitigate this break. So I'm thinking, if our stop loss is below here, do we move the stop loss up? We still have demand. And as said in the notes before, watch out with trailing your stop loss. I'm remembering it. I'm keeping it into account. We still have demand here. So I'll just keep my stop loss here. What I'm actually going to do for this trade is I'm going to take a 50% take profit at the high, realizing 1.15. And then if my stop loss get hit, I lose 0.5 because I'm half the size I used to be. So I'm making 1.15. If my stop loss gets hit from here, and this goes over into distribution, I will reassess. But in general, it's a win-win. Okay. So for now, we're going to say the 17th, 10. 17, 10. 59. We go long. The confirmation is technically it's a model 1, and then this can be the LPS. So that would be 2 because you're backed by a model 1. So it's more a model 1 than a model 2. That means a 2 point 2.1. Let me check. Yes, 2.1. $1.15 so far. I don't know why this is like that. Oh, I forgot where that was. And we're gonna say 50% running. Um, there you go. Save the baby, put it away, clean the chart up. From a market maker standpoint, it is looking pretty sick. It is looking pretty good. Here, we tapped all demand, all remaining demand. There's no demand lower but liquidity. So that's valid for a third tap. Now, we didn't get a structure confirmation like we normally do because structure was pretty high up here. But we found a local accumulation that we traded and entered here. And now we need to break this high, meaning we need to break that high. And that confirms that we could potentially come up to this high, break the supply, come higher, but I don't think we will hold it for that long. Okay. We have to keep in mind that we have not broken that structure or that volume area low, not the structure. This is a key area, very key area, volume area low in supply. So let's see. We're breaking it. You don't want to be losing this low. But it is backed by this accumulation range, right? Local distribution, broke structure. Nothing significant for a setup. Oh, and there you break out. Right now, I would put my stop loss to entry. So the stop loss would be here instead of here. So we would lose no more money on that trade. Locked in 1.15. Following the structure from the low up, you know, I wouldn't even want to lose this low. But we could tap in it to hit demand. So we have to watch out for that as set in the notes. Looking local 1, 2, 3, breaking structure, hitting its target. More like second structure. This right now is definitely a range I want to watch. Deviating the range but not having any structure. There is your break. Do have those equal highs. Oh, yo. I'm looking for like extreme demand down here or a sweep of all liquidity, but we don't have a clear point to determine if the third tab meets all the requirements. But this is the height to break from the top down. But you have to be aware of this little supply zone that we have above it. Don't get trapped in a fake break. Look at that, bro. That's perfection. No, that's your height break. I don't like these volume profiles as much because they have like two mountains, right? 1, 2, with a gap here. Also entering the 10 p.m. section. So not something I normally trade. Let's check the highest time frame this range is valid. Important point, we SFP that internal high. That's looking pretty nice. Oh, and it's Friday. And it's Friday. I would just use this as my whole new range, where this is your range high and this is your range low. Okay. It's going to be our weekend range. Saturday never really gives us any setups most of the time. But Sunday does. So just check price action, but do keep in mind that we have a weekend going on. Okay, so the weekend actually gave us a move up, hitting that target. So let's calculate what that would be. Right here we entered on that break, and we had a 2.3 to there. This will be a 12 risk to reward. However, we took out 50% at 2.3. So let's make the calculation real quick. From 2 till 12 is 10 extra RR on a 50% is 5. So let's grab our cheat sheet and let's add 5 extra, making it 6.15. There you go. So we got the deviation of the range high, sweeping our market structure high that we were aiming at. And we did get a 1 minute break, but it's not back inside the volume profile, which is a requirement for trading a second tap for me. So no entry yet, besides it's Saturday morning. So if I take a trade on Saturday, it would be because I'm seeing all the signs align and not just a few, because most trades take a lot of time. Got the full on rotation after that break. This is where we broke back inside the volume profile, but I wouldn't have taken this because I would not be awake for it. And it's weekend, and it's only a 1.6 RR, and you can't even confirm the range low because it's a second tap. So it could just be a simple rotation to the extreme discount before going higher. But now we swept the range low, tapping into that zone we were talking about. Do we have structure? Yes, we do. Kind of breaking it twice, but that second break isn't convincing at all. Oh, look at that. No, that's not what you want. You don't want to see this rejection if you have a second break rejecting from volume area low and POC. That is not something you want to see. I was looking at this potential Model 1, but I don't like this price action. But it is weekend, so that's what you can expect. Just kind of going through the weekend just to see if something develops. Not really. That was a perfect take profit from us. Very good assessment. But, I don't really see any, as said before, the reasoning behind this trade was, we tapped on demand and we can go up and tap the target, but now that we're coming back to it, what's going to hold price up? That weekend did its thing. You had a little market structure trade right here, but maybe you could have taken it, but it's just a market structure continuation, not really backed by any form of Wyckoff whatsoever. Redistribution here on the very low time frame. See how that works everywhere? 1, 2, 3, break. Probably 15 seconds. Yeah. You can actually trade the seconds chart on this asset. Look at that. 1, 2, 3, break structure, retest, entry, stop loss, first target. This trade would have lasted you A minute, 45 seconds. Make 2% in 2 minutes. Damn, and a massive move down, eh? Nothing to worry about though, because we're coming into that make or break it demand zone. Yeah, that's really your line in the sand. Especially this more refined demand zone, which is directly backed by so lose this darker green box shown on the chart. This is all on the weekend. It's a old-fashioned weekend dump. It's a weekend dump with not that much resistance, so it can be easy to recover if we want to recover it. Looking at how this is developing, this could be a range. This is a valid third tap. It is a valid third tap. What would the R would have been? Could work. 5 in the morning on a Sunday. Would not be in this trade ever. The only thing I like or I dislike is the second tap. It is valid to look at this break from a range. Oh. It is valid to look at this break from a range perspective. But I tend to notice that if you trend from the low up after tapping a significant point, and you do like this is what we have right now, the 1, the 2, and the 3. Often this wasn't the first range starting point. That wasn't. And we could know this could be your range. And there you can have your distribution. Meaning this would be our new range. So that's why I'm hesitant. But it is valid, technically speaking. But I'm not in this, okay? So let's just see. Didn't take this trade, but let's see how it played out. Came back up for supply. That's normal. You do got a reconfirmation now here. That changes things a bit. I would give this a shot and see how fast I can de-risk myself. We got a nice return to zone here. It is the weekend, but Sunday does give setup sometimes. Locally speaking, let's check. No real demand, proper demand to hold price up. Important POI is this low. We have to see what happens at that low. Also, let's see how fast we can de-risk ourselves. Okay. That was pretty fast. There's your break. There's your mitigation. We entered on the break here. Risking 1%, putting our stop at a 0.40% away. Now that we broke the low, we trill our stop loss to this high for a 0.2. So we're only risking 0.5% of our account balance now compared to 1. We do have to check. Look at that. We came back for the more refined 2-minute order block. We do have a 1 minute there, but I don't want to see it come there. So I am going to trill. Now we do have that. We do have it. We do have it. Let's just see how it comes there. If it breaks aggressively and then we get a rejection, we will exit for the 0.5 risk and the 0.5 loss. If we SFP it, you know, we trail it towards the high of the SFP. But for now, let's keep it here, like we said in the notes, because there is supply. Look at that call. That's an amazing call. See how we should learn from the notes in Excel. Now our stop is there because there was a reason to come higher. However, I do want to see this move. Like, it should move now. If it doesn't go, it is giving me range vibes here. Because what I'm seeing now, like, it is giving me, oh, it's giving me new range vibes here. With a 1, a 2, and a 3. So I'm going to be extremely careful here. What's the highest time frame that this is valid? 1 hour. Okay. I'm going to be careful here for this potential accumulation, but these are the main points, right? These are more internal. This is still overruling, but let's see. Okay, there you go. There you go. Look at that decision by us. You could see me wanting, you could see me convincing myself of, oh yeah, I can do it here. And then after, no, wait, we do have this. Because first I said I don't want to see this get tapped, but then I was like, that's how we learn, guys. Yeah, I'm taking a TP here at the volume area low. 50% TP. 50% TP. Just because we do have a liquidity here, but it's not very, very clear. And I would prefer to keep my stop above this order block mitigation. It's not a new one. Okay. Assessing the situation. This is new resistance with your new high here. So you don't want to see that gap broken. We did take a TP. So let's calculate that take profit. At that volume area low. There you go. That's 2.7. I set 50% TP. That's 1.35. 1.35. Nineteenth of May, 7:10. 9. 07. Oh. I know why it's doing that. Short. This was a Model 2 distribution. Model 2 distribution. $4.13. No, 4.3. 4.3. 1.35. I'm gonna add in nodes. Oh, this can go away now. The 50%. I'm gonna add in nodes. For the other like 3% extra, we're aiming for that. We would have to preferably reject from this POI and not break structure because there's no supply above, so there's no reason to come above that point, right? If the if the distribution is going to hit its target. The stop as we speak is here, but I do want to see what happens at this high. And if I don't like it, meaning, pretty aggressive break and we're coming back, I'll just exit. Oh, look at that liquidity sweep. Oh. That's a nice liquidity sweep. Maybe I would have taken an extra TP here, but I'm not going to do that now. Because I kind of missed the move. I would trill my stop loss now to this high. And we entered here, so the stop is break even, okay? Stop is break even. Right there. See how price develops from here. And we hit the rest of the target. So that was a nice trade. Let me see about this position. $2.7 at that low. There you go, 2.7 at the low. We went from 2.7 to 5.7. 2.7, that's 3 extra RR on a 50% position. That's 1.5 RR extra. 1.5 to this makes it 2.85. 2.85%. Very nice trade. To recap it, at this break, I wasn't really sure yet because I was thinking this could potentially be its own range. However, what made me change my mind was this bit of price action here because it's very typical if you have clear market maker involvement that after breaking the market structure, creating the third tap. Oh, this being the third tap. Let me draw it on the left. When you have something like this, and you're not really sure if this is a 1, a 2, and a 3. Okay? If you break the market structure for the third tap, right? Let me draw that better. We draw it like we have here. There you go. 1 tap, 2 tap, 3 tap. And let's say you break structure. Let's call this the structure. Okay. And I'm not really sure if this is the third tap for this massive Wyckoff distribution. I kind of wait it out, I just be patient because normally there are re-entries. But if we come up from there or after this break, so after we break the markers from the low up, creating the third tap, and we get like this price action, meaning it's like this sideways bit of price action, not doing much, leaving liquidity above here, leaving dollar signs here. When I get that after a break, after a third tap, and we get that squeeze up to hit that supply and grab those highs, and then we get a structure confirmation in here, it's a very, very, very common move for Wyckoff accumulations or distributions regarding third tap. And this is what you call the LPSY. If we grab the Wyckoff charts right here, here, BC, UT, LPSY, LPSY. It's kind of the second LPSY on the model too. Okay, so it's this LPSY. Going back to Pepe. So this behavior that I noticed, like, oh yo, we're grabbing all those highs, breaking structure, that changes things. Because then I'm getting that rollover effect. So that really made me change my mind. You can go back and see how I kind of flipped there of like, oh wait, this changes things. And that was my thought process behind it. It's something from experience of trading LPSYs regarding Wyckoffs. Okay. The way we came down, we're leaving a crazy return to zone, meaning this is all just liquidity now. So let's clean this up and reassess. This could also just be a range. And this can be the manipulation of retail positions. And then we have the expansion to follow, right? For this to be the case, I want that initial range low to get taken. So I want this low to get taken. If we take that low and I see a accumulation here, I will long it, take a TP at this high and see if we can fill this inefficiency, and grab all of these highs. That's actually a very sick play. And it is a possibility. Ideal scenario is a model 1 actually in here. That would be the easiest to trade, tapping this defined range demand. Let's extend this range high. Let's check the volume profile. Yeah, this would be your biggest resistance. I would use this as your range. The problem with that, what I was noticing, is if you use that range, you don't have a confirmation. But if you keep using this range, you can say 1, 2, 3, and you can actually enter on this break, having this return to zone. You would enter right here. I would do my stop below the internal low. And then potentially target this high. But I would scale out on these highs. Like that. Not gonna put that as a trade I took now, because I was aware of it, but clicked a bit too fast. But if you did take this, it is valid. But mind you, it is a very tight tap 2 and tap 3. Because if I go on a 10-minute, you don't even see the taps properly. 50 minutes also valid, and it's just one tap. So be aware of that. When you have a tap 2 and a tap 3 that close, we can just, come back, and this becomes your proper tap 3. Let's see how this develops. And we went actually lower. Yeah, so just a liquidity purge, not hitting all highs. If you took that trade, you should already be de-risk. You entered on this break. This is your new market structure point. When you break that here, you can slowly exit the trade. And there we took the low. Okay, now it gets interesting for that potential massive PO3. It's still weekend, right? Yeah, it's still weekend. Okay. So we're tapping into. Did we mitigate this? Because then you mitigated literally all demand, and I don't see reason to take out the low, or maybe S&P the low, but not go lower. Look at that mitigation. That's a perfect mitigation. Okay. The question is, could the manipulation phase of the big PO3 have its own little PO3? It is not the first time I see something like this. It doesn't happen often, but I have seen it before on Solana. Actually, I've seen it before on Solana, where the manipulation phase has its own PO3. Let's see. This is a break, but it's a very poor break. Can you take the low? So that I would definitely be looking for longs now. potential PO3 and PO3. Shouldn't get crazier. We don't have proper structure from the top down until that high. There's your break. I have noted down something once about PO3s looking this juicy. I'm curious to see if that happens again here, because then I'll for always trade it. Not gonna say it now in case it doesn't work. Local distribution here, but coming into demand now. Okay, this is typical price action for a Sunday, or for a weekend, I should say. Oh, and we took the high. Was it the fifth? Nice. Okay. Let's see how it develops from here. We have a 1 and we have a 2. And we have a 1 and we have a 2. This could be a 1, 2, and 3, just like we have been trading so far. The only thing I dislike is where I am shorting a potential distribution. It makes way more sense to accumulate from here. But, we can easily come down, take the low once more, and make a model 1 and have an insane trade here. It's just that, we're in a macro swing long POI. Macro swing long. I would just try to de-risk myself as quickly as possible. I would keep it tight. So here, SFP, this is your break. There's your retest. Don't want to be deviating the volume area high again. There is some supply up there. So we could do this. That will be only better because then we can de-risk ourselves to that high, right? But you don't want to miss the trade because the retest isn't guaranteed. I would target here. If this is going to turn into an accumulation, it will be from on this point. Maybe takes a lower knot, but the RR is worthy. And this is an important low. Let's keep that on it. Okay, what I'm thinking here is just like I described before, on the break, we got that slow move down, and this is that pop up, mitigating some more supply and coming down. Now we get the rejection, but there's this 1 minute order block here, but that's really not significant. Like that's too low of a time frame on the weekend. Um, I don't want to come higher than this point, but I don't want to wick it and then break structure, right? Our stop loss is now here. Our entry is right here. There you go. Clean. Very clean. Very clean. Yeah, this is where I would TP. I would TP 75% right here. Discount in case it accumulates, leaving 25% run in case we go lower. Um, very, very funny to see, and also for you guys that what I just explained with the 1 and the 2 and the 3, having that sideways effect after breaking structure and then that pop up. Very typical on every time frame. So it's funny to see it work literally the trade after that. Right here, you had no confirmation between these 2 points to confirm a short as the LPSY. Yeah. So I'll put my stop loss to entry and realize, oh, that wasn't smart. It was 5.5. 75% of 5.5 is 4.125. 4.125. Let's do 4.13. So we have two decimals. And then 25% still running. And then the entry timing was 20:04 on Sunday 19. So two trades on Sunday, you know? Oh, two trades on Sunday, both beating valid Wyckoff distributions. So that just shows that Sunday is still, compared to Saturday, Sunday is valid. 20:04. A short. What was the setup? Model 2 distribution. 3 point. 3.1. 3.1. So we have one, we have two, we have three, we have four. Well, if you guys pay attention, you guys know what my entry models are now. Because we have had a one, we've had a two, a three, and we've had a four now. That's pretty funny. That's very diverse. Compared to here, we had a lot of market structure trades, right? We haven't had six here. That is funny to see. Okay, 25% is still running. We're breaking that low, but there is a chance that this turns into accumulation for the PO3. Don't forget, guys, we have that potential PO3. Let's see. You hit that demand. Let's extend it. I am starting to dislike the distance between tap 2 and tap 3. Maybe. Maybe this is just the start of a 45-minute range and this becomes your first tap and we can have a second tap. It's very possible. It happens all the time. Where on the higher time frame, you neglect the first touch in the first point. There you go. That will be my final TP. That will be my final TP. So let's finish that short real quick. From 5.5 to from 5.5 from 5.5 to 5.5 to 7.9. 7.9 minus 5.5. That's a 2.4% extra gain over 25% still running, meaning we have a 0.6% extra gain. Let's add that 4.73. 4.73. And what I do notice now is that I took two trades, both being distribution trades, one being the LPSY and one entering on the break itself of the third tap. And I have both have hit its target, but I've taken take profits in between. So I'm gonna say fun. Check. How do I want to phrase it? I'm gonna say like watch out with taking partial. See. Oh. Watch out with taking partial. See piece in distribution schematic. So I'm gonna write this now, knowing it's for both, because I remember. I've said watch out with taking partial TPs in distribution schematic. Range low is target. With this one, it is valid to take a partial because you also have potential accumulation to form. But you never broke any structure. So if you're being patient, then you would have made a full 7%. On the previous one, however, on this short right here, there was no accumulation. In fact, we had one low, right? Which was this low at the time. So there I should not have taken a TP, especially with the liquidity here. So I just write it down to remind myself, just like we do right here with the trailing. Can this become a Model 1? That's the question we're all waiting for. Or where we are all curious. I would like this is crazy, okay. If we break that high, low key, I would just open the swing long and not touch it. That's a break. thing is with this one, right? The moment you see that high or low here, I wouldn't do this though. I would keep my stop here because it's the clearest invalidation. Locally speaking, the R is terrible. It's a 1-to-1. But it can be the PO3 of this range, which makes it a 3.7. But this can be the PO3, and the manipulation phase of this whole move. So what I would do is I would actually open the trade with this potential. That would be crazy. That would be absolutely crazy. They're looking identical though. Look how you have that supply. Here the range is a bit high, but look at the volume area alone, the POC and the supply, and right here. Both having their own manipulation phase. Let me check one thing. Just we came into a swing POI regarding this demand zone. Like it's the demand zone. We're gonna try and take it here. Let's just try it. Clear stop loss. I think this is the clearest invalidation there is. If we do take this with a confirmation like this, I will not see this as a 4-tap. This will be the first point, and you just have to zoom out. That is a scenario. Let's see. Oh, you know, we're still in this position, but I'm gonna just get rid of the position because it's messy. But these can also be a model one, right? A 1, 2, and a 3 tapping that supply zone. If it was a PO3, the model one hit its target. If it was a PO3, it shouldn't have this rejection. So you can say like, okay, break that low, and you should not be in this trade anymore. However, you have demand right underneath it. But our entry is right here. Let's just see what happens at this demand. Yeah, no. I would I would exit that trade on the retrace. Yeah. I would exit right here on that retrace for sure. Let's see how it plays out. There's no way. Oh, I remember this. No way. I remember this, guys. I remember this. No way I fell for it twice. This is the bottom. This is literally bottom on Pepe. This is the bottom on Pepe. I remember it. I remember it. This was a Model 1. We broke structure, but instead of it, having that follow through, we tapped like some sort of demand in this sell to buy, and we went higher, making this a Model 2. I remember this. I remember this live. It was I wasn't awake for it, but I checked it afterwards. What time is it? Yeah, it was 3 in the morning. So I wasn't awake for it, but I remember waking up in the morning and seeing this develop, and I was like, oh, I would have gotten trapped there. This is a massive trap. Like you cannot get bigger manipulation than this zone. I've never seen something like this. Um, Things like this happen on macro bottoms because it's the ultimate manipulation to fill long positions and reverse price. So we have a break even trade, but we missed the swing long. Oh, I forgot. I forgot. Now I completely remember it. Now I completely remember it. Trading it live. Okay, let's write it down. It was just a simple Model 1. It was a it was a 1.1. It was a 1.1. It was a long 20th. Macro low potential BO3 macro low when trading a potential macro low. Watch out for extreme manipulation. Oh boy. Yeah, so in general, in this set, okay, so what I told myself the last time, and I fell for it twice, but I'm not gonna fall for it the third time. Last time, I also said, okay, this range in general, we're expecting it to be an accumulation and to go up from here because of the macro reasons, right? We're at that range high where the swing POI, the make or break it demand. Um, I'm respecting higher lows and higher highs because that's what Pepe has been doing. This is the point to put in a higher low for a higher high. But we got our Model 1, that instead of, breaking past supply and immediately having the PO3, we got a potential Model 1 distribution breaking structure. Technically speaking, this whole thing is range demand, right? This whole break is range demand, like I always do. And they got mitigated here ever so slightly. So if we pull it down, this is still unmitigated demand. That's how I do it sometimes if there's no like order block to put on our chart. And I don't see anyone doing that, by the way. That's something I came up with. And what will be the ultimate manipulation? So instead of thinking, oh, this accumulation is not working, even though we were expecting like a macro pump, because I was talking about how this can be the manipulation phase of the bigger PO3, right? Um, Instead of thinking, oh, this is not going to work, we should think, because we're at such a macro swing POI, what will what would be the ultimate manipulation? That would be this. That would literally be this, where this break right here is just pure manipulation. That's so funny. This is literally the bottom. I think it's actually an amazing time to um to stop it right here for now. Maybe I'll do a few more hours later tonight. But this is the point of reversal. I will exit replay mode for you guys. Look at that. Look at that. There's no way. There is no way. That is crazy. The 20th of May. The 20th of May 2024. Let me check something. 20th of May 2024. Is that when Bitcoin had that pump? Did Pepe go that crazy? The 20th of May? Pepe went nuts. One, two, three. We had a bump up. Tapping the volume area high. Deviating the volume area high. Had that pump up and I don't remember Pepe going this crazy, bro. A full almost 100%. That's nuts. Well, that marked the bottom. That marked the bottom. That's crazy. That's absolutely crazy. Now we were expecting the PO3 here, and then we knew it could be the PO3 of this whole thing. It was a beautiful assessment by us because I totally forgot where the fuck we were on the chart. I didn't remember it. If you're so deep into like the 1 minute time frame, you don't remember where you are. But I literally fell for it twice. Okay. Okay. From now on, you guys should also remind me at a macro swing POI where we expect a higher low and we expect an accumulation and it's looking like PO3s and PO3s and everything's looking bullish. Instead of thinking, oh, it's not going to work anymore, think of, oh, that would be the most insane manipulation ever. Okay? Now, to recap it real quick on the trades that we have taken, let's zoom in. We have Pepe. We took 5 trades, okay? 5 trades in 5 days. Technically 4 days because this is like 0006, okay? So we took 5 trades in around 4 or 5 days, and we had a 7.6% gain on a Wyckoff Model 1 distribution. We had a 6% gain on an LPSY backed by Wyckoff Model 1. We had a Model 2. We had a Model 2, and then we had again a Model 1 with the PO3 in the back of our minds. I'm actually gonna, how should I do this? I'm gonna make this a color. Let's make this a color. Let's make this a color, and then, in my opinion, way cleaner price action on gold because we have way more ranges, and way more Wyckoff, right? So that's just my preference in trading style. All these ranges and the range deviations and the Wyckoffs, but it's absolutely beautiful. We traded very good. This is very nice. We made 7.6, 13, 14, 17. We made 20% plus in 4 or 5 days of actual proper setups. So tell me anyone else that can get a result like that live, right? You guys watched me trade live. I had no idea where I was on the chart until the PO3. But yeah, made 20% 4 or 5 days. Absolutely, absolutely, absolutely amazing. And the biggest difference that I noticed with myself as well while backtesting compared to real life trading is, of course, that right now we can just click until the setup appears. In real life, we have to wait and wait and wait. So you may have a setup on the chart, and you wait, and then it happens, and you kind of miss it, or you aren't as alert anymore because now in backtesting, you're fully focused, right? You're fully focused just on Pepe, and you can click yourself and take the time to think and trade. And that's the biggest difference compared to real life, where you have to actually wait for the setups. And then maybe in the meantime, you were watching other charts, and then this setup plays out, and it kind of messes up your vibe. So, for example, the trades here on Sunday at 7 in the morning. Normally, I wouldn't have been there, and the other times I would. These are still times I check the charts. Maybe not this one at 12 p.m. But I do remember watching this live, so I was awake for it at that time. But that's the biggest difference. So take that into account. That also when you're live trading, you you really have no distraction. So be behind your PC, have some music in, do your TA, set alerts, do some computer work or whatever you need to do. Your alert goes off, check it, and then instead of checking it and immediately doing something else, if it's not an entry yet, check it and keep the chart open there for a moment to see price develop. Because when price develop, you start thinking, oh, when this and this happens, I'm going to do that. And when that appears, I'm going to de-risk myself, stuff like that. For me personally, it's really good how we took these notes at the beginning of the stream into account and applied it to this. Because right now you see nowhere, oh, while trailing your stop loss, watch out for SFPs or demand or supply mitigations. Because these two trades here, I wanted to skill or I wanted to trail my stop loss even though it wasn't valid yet. And you could absolutely see how good it turned out for me. Um, that I didn't do that because otherwise I would have been stopped out for a trade that was still, in my favor. So I think a very nice backtesting. I'm gonna continue doing more backtesting on Pepe, maybe even Solana, and build our track record that way. If you guys have a preference between gold and Pepe or Sol, let me know. Then I'll put a bit more time into those than the others. Um, because if you guys also trade better on Pepe and we're all trading better on Pepe, let's just practice more on Pepe, right? Because I think a lot of you guys are also crypto traders like me. So if you liked it, just sub to my channel because more vids will come. Appreciate everyone that's still watching and listening to me in the end of the video. You guys are all gonna make it, and peace out. Love.